And since everything is done over the computer, we just name it computer fraud. So I know everybody knows what hacking is. Hacking is also considered a fraud, which is somebody coming into your system and stealing your information. That's fraud, and companies are dealing with this with all the time. So, for example, TJ Maxx in 2008, 2009, TJ Maxx was hacked into by a few hackers, and they were stealing all financial information, such as your birth records, your account balances, and all that stuff, your credit card information, and stealing money from you. And in turn, the companies have to pay for that fine to the customers, and it's a big loss. Um, if you look at a report, and it's also given in a textbook somewhere, that these expenses for companies are in trillions of dollars. Okay, it can make anybody bankrupt. Imagine you work for a company that has had this kind of a computer fraud, and they have to pay. It's insured, but they have to pay a fine for this thing, and then they go into bankruptcy. And the first thing they do when a company goes into bankruptcy is fire people, lay off people, and you might always end up losing a job. So fraud is a big problem. And there are two kinds of frauds that you can think. It's an external fraud, somebody coming from the outside, and then there is internal fraud that is created inside within the company. And the purpose of a fraud is always to harm somebody else. It's an intent to harm, and that's how we classify fraud. So I think I have a multiple choice question or a true or false on the second exam. Remember, fraud is an intent to harm. So you go with an intention. It's always predetermined. Okay, so let's look at chapter 5, computer fraud. And so frauds to your accounting system could be anything. It could be anything happens, natural disaster, any attacks that happens from outside. You have problems with software errors or equipment malfunction. And this shouldn't happen if you have a good system. You should never have a software or a hardware problem. Unintentional acts could be errors from humans that are working within the company. And these normally happens in either the warehousing or production department or in the accounting department where you make wrong entries. Okay, errors happen all the time. It's not a new deal. Catching those errors is important. And so if you have a strong accounting system, that will not make you make errors. For example, journal entries. If you make a debit for 1,000, and if you make a credit for 900, it's an error. But your system shouldn't allow you to do that because it doesn't balance. Your debit should always balance your credits. So that's one thing. And then you have intentional acts, which is what we're talking about, crimes. Okay, and this could be a physical crime or a computer crime, which is logical crimes. So what is fraud? Again, as I said, it's an undue advantage taken by one person or group of people acting against somebody else. One of the biggest frauds that we have, and that's why you have these new textbooks, is one that you studied in Enron. So if you don't know what Enron was a big company in 2001. The company filed for bankruptcy because of fraud. And before that fraud, the company was deemed as one of the most successful companies. But it was found out that they were making up numbers simply because the company, in fact, had $10 million in losses. They changed a minus sign to a plus sign. And that cannot happen. Okay, they did not have a good accounting information system. They did not have proper controls. They did not have proper auditing done, and so because of that, a lot of people lost jobs. Then you had second company called as WorldCom, which is now owned by Verizon, and they did the same thing. Okay, they filed for bankruptcy because there was a big fraud discovered. It was a company that was a high-tech company that was dealing with phone lines and mobile situations. It was a very big company. So people working within the company were creating false documents, and so that's what fraud is. Okay, so this slide I would mark as important because this is on your exam. Slide number 3. Okay, and there's always going to be somebody who's going to suffer loss. There are two kinds of frauds. One is called as misappropriation of assets, and the other one is called as fraudulent financial statements or fraudulent financial reporting. So let's look at misappropriation of assets. It's a fancy word of somebody stealing your material. Okay. This happens all the time when you go to a grocery store because you have so many items and you have so many small items. If somebody puts a pack of gum in their pocket and walks out, it's called as misappropriation of assets, stealing. This is a very common form of fraud or a problem that companies face. At warehouse or at manufacturing, for example, people working within the company can steal raw materials and sell it in the open market and make profits for that because it doesn't cost them anything, but they can go out and sell it. For example, if you are Apple, for example, and you have iPhones sitting in a warehouse, if a few people come and steal something and sell it in the open market, they can make money. Okay, and so that's what misappropriation of assets are. And the job of a management, which is the CEO, CFO, and all the vice presidents, the presidents of the company, their job is to minimize this or even try and eradicate any kind of fraud. Does it still happen? It happens all the time, and big or small. If you look at IBM, if you look at GE, if you look at Microsoft, any company, this kind of fraud is going to happen, and it's a big problem for manufacturing and retail services. For example, I teach at CSUSB, and if they provide me with all the stuff, pencils, pens, papers, and all that stuff, and if I take a pencil or a pen, and if I walk out and bring it home, do you think it's fraud? It is, okay, because I'm taking something that's given to me for free and I'm using it for my own personal purpose. That's for my work. All the supplies that are given to me is for work. So it could be as small as that, or it could be as big as just stealing a car and taking it out, okay? It doesn't matter how big or small the value is, a fraud is a fraud. And for example, I know if you take a pack of gum and somebody steals it and walks out, or in the warehousing, some people working there take a pack of cigarettes or whatever it is, they walk out. At a unit level, it's not very expensive. But if everybody keeps doing it, and it happens at all the stores, Walmart has 3 or 4,000 stores. And if it happens constantly at that store, at the end of the year, it's millions of dollars in losses. Okay. And so that's not a good thing to happen. So that's misappropriation of assets. Fraudulent financial statements doesn't really happen, but when it happens, it's big, such as an Enron or WorldCom, or you had Wells Fargo a couple years ago. All of those were financial statement frauds. That means somebody is falsifying on financial statements, just making up numbers. It shouldn't really happen if you have a strong accounting system because everything is automated. Nobody can make changes directly to your financial statements. But if you don't, and somebody is trying to make up numbers, that's a big problem. And these are high values. These are always in millions and millions of dollars. And companies make significant losses. Investors, shareholders, banks, everybody makes losses. A shareholder could be anybody, could be you and me. Even if you own one stock of a company, we will lose that investment in the company. Okay, so that's financial statement frauds. And it's very, very reckless, and it creates a lot of issues for people that work within the company, for all the investors, and for anybody in the community that works there, because people get laid off. It causes a problem. Okay. So that's fraudulent financial statements. Any questions? Okay, I'm going to move forward. Okay, so there are reasons for fraudulent financial statements. One is, well, you take the investor's money and run from it. So from your finance courses, if you're taking that, there's a stock price that is attached to a company. So there are two kinds of companies that you should remember. One is a public company and the other one is a private company. A private company is it's called private because you don't have outside investors within the company. It's a family-run business. Money comes from within or some close group of investors that work on it. What we are talking about in this course and everything that you study in accounting is for public companies. These are companies that have outside investors such as shareholders and stockholders. And the management's bonus is tied on how high the stock price goes. Okay. So Google stock or Amazon stock right now is $1,400–$1,500. It started out as at $200. It's $1,500. Okay. And the management's bonus is tied up on how high the stock price will go. Okay. So if the stock price dips, the management will not receive their bonus. Again, the CEO's bonus are in hundreds of millions of dollars. So their bonus is tied to this. Also, somebody is getting fired somewhere if the stock price goes down. So they have an incentive to keep the stock price high. How do you keep the stock price high? By having a higher net income, your profits. And if you don't make enough profits, what do? You make up numbers, and that's where you have financial statement fraud. So that's why you have the stock price tied to that. Meeting cash flows, if the companies are not making enough money or not selling enough, they need to borrow more money. And to borrow more money, you need to show the company is strong and making profits. So again, you make fraud there. And again, basically, you're hiding losses by doing that. Good. All right. There's something called a SAS 99, and SAS stands for Statement of Auditing Standards. And there's called a SAS 99, and this deals with what to do when fraud is found within the company. What does an auditor do when there's fraud? Their responsibility. So let's understand what an auditor is. Okay, basically, auditor is an independent third party, such as PricewaterhouseCoopers, PwC, Ernst & Young, Deloitte, all these big four accounting firms, or all the local CPA firms that you know in San Bernardino. Their job is they don't work for the company. So they're not hired by the company, they're not employees of the company. Company, which is any company like GE or any company, they need to hire these auditors. The board of directors have to hire these auditors so that the auditors can give a report. This is required by law. Okay, law requires that every company needs to get audited, every public company. And so their job is to give an opinion as an auditor if everything is okay or not. And sometimes they find fraud, sometimes they don't find fraud. It depends on how big or small the fraud is. If it's small enough, then you write a report and it's okay. But if it's big, then you have to literally let the public know what's happening within the company. And these are the responsibilities. So again, the auditor has to detect fraud. They will walk in, and if they find fraud, they have to understand what the nature of the fraud is. They need to understand what level the fraud is occurring. If it's occurring at the factory level, they talk to the management. If the management is involved in fraud, they talk to the board of directors. And the board of directors will then talk to the authorities, the FBI or Department of Justice or whoever it is. Okay. And then so the auditor's job is just to make sure that there's no fraud, or if there's fraud discovered, to report that. And identify what assets, what liabilities, and what other things were discovered in that fraud. Okay, so they perform various tests, which is not part of the scope of this course. We'll do in 440. We'll study all of that in auditing course. But for now, understand there's a code called as code SAS 99 that deals with auditors and fraud, and what they should be doing while doing fraud, or when fraud is found. We'll go into more details in the next course. Okay, all right. So there is something called as a fraud triangle, and I have quite a few questions on this fraud triangle. There are three components of fraud triangle. There's pressure, opportunity, and rationalization. And when all three are there, there is a high chance of fraud occurring. Okay. Most companies have either one or two of those, and so because you have a strong system within the company, fraud never would occur or never should occur. But when all three are present, all three are there within the company, there's definitely fraud occurring. So let's look at what pressure is. All right. So pressure is to maintain that high stock price. So it's a financial pressure by itself. That if you are competing within an industry, for example, let's look at two companies that are competing significantly. One is Apple and one is Samsung. Two companies in the same industry, iPhone, and then you have Samsung, Galaxy, whatever. They are both operating in the same industry. They have significant pressure to maintain competitive advantage. And the only way they can maintain competitive advantage is by showing higher net income, profits. It's all about the money. And so they have this financial pressure to prove themselves. And if they are not meeting the forecast that somebody else has done, at the Wall Street, then they have the pressure to go higher and higher in their net income, and so they will have these financial pressures. And when there is financial pressure and the stock price, there is high chance of committing fraud. The other one is lifestyle. And lifestyle is because CEOs maintain a significant lifestyle. An average CEO gets paid anywhere between 10 to 15 to $100 million a year. That's their regular pay. Plus, it includes bonus and stock options and everything. And they have multiple homes and jets and all that. And it's not uncommon. It's allowed by the law. It doesn't, it's not wrong. But they have this lifestyle to maintain. And so when their job is gone, their lifestyle is gone. And when the companies stop making profits, they are the ones to get fired. So to maintain that lifestyle, they have to commit fraud. And so that's why that's pressure right there. Okay. The second one is an opportunity. And this is a big problem. No company should give you an opportunity to commit fraud. There should always be some kind of a fraud correcting software or fraud correcting control within the company that will limit or not let the fraud happen. There's something called as lapping or kiting. So these are the terms that are used in a textbook. Kiting basically doesn't happen anymore. But what it would be is when you were writing checks, physical checks, you'd write checks to one bank, and then from that bank it will show balance available, and then you can write a check to another bank, and it will just show that in both banks you have $20,000 instead of one bank having $20,000. So kiting is a process of check fraud, writing checks over and over again until the checks bounce. It's not a good thing, but companies would do that. An easy example is if I have two bank accounts, one is at Chase, one is at Wells Fargo. I only have $20,000 in Chase, and I have zero balance in Wells Fargo. I'll write a check to my other account for $20,000, and when you write a check, it takes 7 days to get cleared. But when you write a check, it shows available balance of $20,000. So it will show 20,000 here because money hasn't gone out, and it will show available balance of incoming $20,000. So instead of 20,000, you have $40,000. That's called as kiting, and the banks and the companies would do that all the time. Now, since everything is an online payment system, this really doesn't really occur, okay, because everything goes EFT, electronic funds transfer. And so that's an opportunity that because of your online system now that has been limited. Okay. And then you rationalize. It's basically justifying. If I'm working 50 hours a week, I'm working so many hours. If I just take this computer home, nobody's going to care. That's basically justifying. Okay. And this only comes when you have a dishonest employee, or it only comes when you have a weak system within the company. If the management doesn't care, why would an employee care? So it all depends on your mission statement and the vision of the company. So everything starts how ethical or unethical the company is. For example, in Enron, the CEO and CFO were involved in fraud. So everybody in the company started doing fraud. Nobody cared. And that really is not good. Let's just look at two examples. Let's look at Walmart and let's look at Target. Which one do you think has more ethics, Walmart or Target? We all know Target. Okay. I'm not saying Walmart is bad. I'm just giving you an example. All right. But it's the ethics, because at Walmart, you have to search for somebody to help you. At Target, you already have somebody helping you out. They're both in the same industry and they're both making money. The ultimate mission for a company is to make money. It's how you make money. It's the attitude and justification that you give. So that's how you rationalize, and that's where fraud happens. Okay. So those are the three things. So remember this fraud triangle right here: pressure and opportunity and rationalizing. Good. All right. And so again, computer fraud is, we'll look at this in more detail in chapter 6. But again, the easiest way of committing computer fraud is understanding the system of somebody you're trying to hack into. So the hackers are very smart. They will find out what kind of computer system a company uses. One of the biggest fraud that had happened in computer hacking was about hacking a securities company, a company that was providing security. An anti-software company was hacked into. So if you understand that an anti-software company was hacked into, how everybody else can be easily hacked. Okay, hacking is nothing more than just getting into your computer, stealing your personal identity, stealing your money, or stealing private information, such as Coca-Cola makes money not by just um, you know by bottling things, but they have this formula that is very, very expensive. That formula is lock and key. If somebody had that formula, their competitive advantage would go down. Okay, and so that's where the problem arises. So most companies, such as software companies, or let's for example say, let's say Disney makes a $200 million movie. If it gets leaked online, that's hacking, because now when people watch it online, they're watching it for free, and Disney doesn't make money, and it's a big loss for it. Okay, so that's where this problem of computer fraud occurs, since everything is online. Gaming industries, software companies, Microsoft, Google, any company that you pick up, these are all online companies, software companies, and their assets are not physical assets. Their assets are all software, somewhere in the cloud or somewhere stored somewhere. If somebody steals that, they're gone. Okay, and so we'll understand more of that in the next chapter. Good enough. And so there has been significant rise in computer fraud. I cannot tell you how many frauds are occurring every day. As we speak, I think somebody's getting their identity stolen easily. This happened to me a few years ago when I was by UCR. I was filling up gas. I put in my credit card, but by the time I get home, there were $900 unaccounted charge on my credit card. Why? Somebody just made a copy of my credit card when I scanned my credit card into the gas station, and it's that simple. Okay, within minutes somebody used it for $900. They filled up gas and had groceries and all that stuff. But since your credit cards and debit cards are FDIC, which is federal backed insurance, you get your money back, but somebody at some point is paying for that. We are, because it comes out from our tax dollars. Okay, we are paying tax for all the frauds that are occurring. So fraud is a big loss for us, because our money that goes to the government, sorry, somebody's trying to chat it right now. Yes, I have a question. Did you pay at the pump or in the store? At the pump. So when you go to the automated system, I paid at the automated system, and it's very easy to make a copy. I'll send you a link for the TJ Maxx fraud that had happened, and you can watch it. It's a 15-20 minute documentary about how these were high school kids. All they did was make copies of credit cards, and they made millions and millions. In the end, everybody, I don't want to give out the ending, but everybody died. But these were just high school kids that were committing fraud. And if high school kids can do it, you can see how many other people can, how easily they can do it. The problem with computer fraud is it takes a long time for somebody to find out. Now, this was real money for me, but which came out, and I immediately called my bank and I got it resolved. But sometimes when it's a company of a larger size, which is doing trillions of dollars in sales, it's very hard to find out. It takes a while before you can even find out. It might be 5-10 years, and somebody might just take millions out of your account and not even know. People don't even know how to report that. Imagine people that are retired, sitting in retirement homes, and just checking their online bank account, and somebody just takes a second to take the retirement fund out. They don't even know what to do with that. It's a big problem. So companies face the same problem as individuals do. So it's again, and law enforcement doesn't really have amount of people to help with all the fraud. Computer frauds go to the FBI, and FBI doesn't really have that much capacity or that many employees working on frauds. If you watch, have you ever watched? I'm going to suggest a show called it's called American Greed on CNBC, and this show has been going on for last 10-12 years, and it's all about computer frauds and accounting fraud. for last 10 years, they have one episode every week. You can imagine how much fraud has been occurring every day. Yeah, it's a good show. Um, so again, so you can see fraud is a big problem, and it only the only way we can cut fraud or reduce fraud is by having ethical people working for us. And that's why when you go for a job interview, and if you come to 440 with me, we'll develop your resume, we'll do all that stuff, and I'll tell you what job interviews look like. But in accounting, job interviews are multi-step process. There are at least 5 levels of interview that you need to go to before they can hire you. It is all because it's first, it's required by law, and the other thing is they want to make sure that you are the right person. Ethics plays a significant role. As an accountant, you know everything that's private within the company. So uh, it's a big process, and fraud is real, and it happens to everybody. You don't want to lose a job because of fraud, because if the company loses money, you're the first ones to go. This happened to me. I wasn't laid off, but I was working for, all my experiences in the Fortune 500 companies, large companies, very, very big companies. So this was a big pharmaceutical company, and one of the vice presidents committed fraud. The fine that the company had to pay was $180 million. And so it's a company, fairly large company with $40 billion in sales. But again, $180 million of wasted money going out. And since it was a big loss for the company that year, people got laid off. And then people that get laid off are majorly in the later years, in the 50s and 60s, and they have to start looking for jobs. And all the people that you see in Walmart greeting you are people that had to go back to work. So be sympathetic towards them. I'm just kidding. Anyways, so that's our chapter. Any other question? Good. All right. So that's our lecture for today. And what we will do is, I was expecting a few more students to show up. I think I have 30 students. 3 of you showed up. Maybe I should give you extra credit for that. Yes, thank you. So this has been recorded. I'm going to post this on Blackboard for everybody else, but we'll do this every Monday. I think most students have classes at this time, so I'll record it and I'll post it online for you to see. Okay. Thank you guys for showing up. And I will see you next Monday. See ya. Bye.